Hey, welcome back. Okay, in the last video I defined what is accounting. So we have understood what is accounting. Like I explained, accounting is the process of identifying, recording, classifying and summarizing, as well as interpreting financial information. Then we must then communicate that financial information to its users. So in this video, I just want to go through each stage of this accounting process. So like I mentioned, I said we first identify financial transactions or financial data. So this is the starting point of accounting, right? Why? Because it helps us to recognize the events that happened to the money or to the financial impact of the business, right? So we must identify all the transactions that occurred, right? Everything that has impacted the movement of money. We need to understand, identify those transactions, right? So it is of much significance for us now to understand that the rule is that only transactions that can be measured in money are recorded, right? All transactions that can be measured, right, in monetary terms are recorded, right? So if the event that occurred doesn't affect money, is not an accounting transaction. I think that's clear. So we identify the transactions. Then after that, like I mentioned, is the process. We moved on to another stage, which is recording. So once we have identified all those transactions must be recorded chronologically, right? Must be recorded chronologically, right? So when writing transactions, right, in the what they call the book of original entry, and that is called the journal, right? You might have heard people saying, maybe the accountants saying, I need the journals. I need you to submit the journal, right? Something like that. Journal refers to the book of original entry. That's where we record all the identified transactions. So basically, there is this maybe similar format. There must be a date, the accounts that are being affected, right? We will be talking about the debit and credit. You know, accounting, basically, you'll be managing the accounts of a business. So we'll be having the expense accounts, the operations accounts, whatever accounts that you're going to be creating. Maybe it's, if it's your personal finance, the food account, maybe the investment, the bills, whatever the name that you want to give to these accounts. So these accounts are sort of the buckets whereby you put information that has to do with that account, if it's about food, if it's about expenses, right? So that's why when you're recording, you need to understand the account that has been affected. Then after that, after we have recorded those transactions, we then need to classify these. Like I mentioned, now we are talking about the accounts that I was talking about, right? So we need to classify the financial information, right? We have the expenses, we have the sales, or we have revenue, right? These must be grouped, right, according to their type, right? Why? Because it helps us now when we are recording, we know which account has been affected, and perhaps we want to understand where is our money going. We might see that information from the expense accounts, right? Or the expense account that we are spending a lot of money. So we need to classify that information. So after that information has been classified, we do another process called posting, right? And we post that information into a book called a ledger, right? We're going to learn about that, but I think basically it's not very complex, right? We post that information into a ledger. We're going to learn what is a ledger in detail and what is a journal. Then after that, we then summarize that information. If we only work with the accounting information or financial information that has been classified, we will be having endless list, and it becomes very difficult for us to interpret or to analyze or to see exactly the information and make informed decisions. So we have to summarize that information. So this step now contains the volumes of financial data, right, into useful totals. So the directors or the CEOs, they want to understand the totals. They want to see the totals. How much do we owe? How much do we have? Right? Something like that. So that is called trial balance preparation. So trial balance refers to those totals in summary, right? The summary of those accounts, right? We might need the total income, the total expenses, the total assets that we owe, we have, the total liabilities. Now you see it has been simplified. Then after that, we then need to interpret or to analyze that information, right? Numbers alone are not enough. They must be interpreted or analyzed, right? So now we are evaluating the financial data such that we comprehend, we come up with decisions. For example, we want to see the profitability of a business. We want to see the liquidity part of the business. We want to see the trends. We want to see where are we standing as a business? Where am I standing as a person? My financial position as a person. We are now interpreting that data. Then after we've interpreted that data, we then finally need to communicate that financial information. So how in accounting do we communicate that information? So now we are talking about financial statements. So when I was learning, I was just confused at first, but I got shocked. Why? Because these are similar things, and before I learned the basics of accounting, it was very difficult for me to understand that. So there is nothing complex about financial statements. You might have heard the accountants or the finance guys saying, I need the financial reports, I need the financial statements as quickly as possible. So we communicate that information through what we call financial statements. So this is the final step in reporting to users. So the reports in accounting, these are financial statements in simpler terms. So we're now presenting the financial results, right, to the stakeholders, right, in a clear way, right? So we have common reports of financial statements that we have. Like I mentioned, a financial statement is just an accounting report. So we have the income statement, we have the balance sheet, we have the cash flow statement, right? Sometimes we might have the management report, but basically these are the reports that we have. So basically that's the process of accounting. The process goes on, and it's a life cycle. It's a process, right? So most of the accountants, they follow this process. So basically that's it when it comes to accounting. So thank you so much. Have a good day. See you in the next video.